So you suck at math, numbers, decimal points, percentages, you hate all of it. Wait a second, am I married to you? This is my wife to a T. But if this is you and you hate all things numbers, this video is for you. Today we're going to break it all down and what it means to get a mortgage and what that rate can mean to your monthly payment if you're looking to buy a home in the near future. Hey, it's Mark here with the Hiller Group, brokered by eXp Realty. My team and I have you covered here along the beautiful Florida Panhandle from Pensacola all the way through Panama City, where our team has been fortunate enough to serve over 1,350 families in the past 10 years alone. When you're considering purchasing real estate, one of the most significant factors to consider is the mortgage rate. The mortgage rate directly impacts both the down payment and the monthly payments, influencing the overall affordability of the home. Here's how. The down payment is typically a percentage of the home's purchase price. The mortgage rate significantly affects monthly payments. A higher rate means more interest is paid over the life of the loan, resulting in higher monthly payments. On the other hand, a lower rate reduces the amount of interest paid and lowers your monthly payments. Several key factors can cause changes in mortgage rates, like current economic conditions like inflation, economic growth, employment rates. These can all influence mortgage rates. For example, higher inflation typically leads to higher mortgage rates. What are we feeling right now? The Federal Reserve's decisions on short-term interest rates can impact the mortgage rates, although this relationship is not always direct. Next up, global events. International events such as geopolitical conflicts, global economic downturns, or even a pandemic. Y'all remember that COVID thing a couple years ago? These can affect investor confidence and lead to changes in mortgage rates. Housing market conditions, good old-fashioned supply and demand in the housing market, can also impact mortgage rates. For example, a booming housing market might lead to higher rates. We are also experiencing this right now. Low supply, high demand keeps your prices high. Now that we have the specifics out of the way, let me give you a real-life example of how it works. Buyer A, 5% mortgage rate, a home price of $300,000, a down payment of 20% or $60,000, a loan amount of $240,000. The monthly payment on a 30-year fixed is going to be approximately $1,288. Now buyer B has a 9% mortgage rate, a home price of $300,000, a down payment of 20% or $60,000, a loan amount of $240,000, a monthly payment on a 30-year fixed is approximately $1,933. Now buyer C has a 7% mortgage rate, home price $300,000, down payment of 20%, or $60,000, a loan amount of $240,000, a monthly payment on a 30-year fixed is approximately $1,597. Now we have the same mortgage rate as scenario C, but the rate is still 7%. But the home price is now $350,000 due to appreciation. This is what happens when you wait, because prices are continuously going up. Down payment of 20% is now $70,000, not $60,000. The loan amount is $280,000. The monthly payment for a 30-year fixed is approximately $1,864. This is $267 more a month and an extra $10,000 in down payment for waiting. Did you hear that? $267 a month more and an extra $10,000 down because of waiting. Now, keep in mind that some programs and packages offer less than 20% down, so make sure that you're asking about those to see if it's right for you. Here are my top tips if you're ready to make a move and buy your first or fifth home. Number one, Before you start the house hunting search, get pre-approved for a mortgage. This will help give you a clear idea on what you can afford and show sellers that you are a serious buyer. Number 2, a higher credit score can help secure you a better mortgage. Pay down your debt, make all your payments on time, and check your credit report for errors. Number 3, addition to the down payment, you'll need to budget for closing costs as well as realtor commission, which can range from anywhere from 3 to 7% of the loan amount. Set aside these extra funds to cover these expenses. Sometimes you can get a seller concession to pay for some, if not all of this. But if that's the case, don't be thinking you're going to be able to go in there and offer $50,000 low and then ask the seller for 7% concessions, right? It's usually one or the other. If you're going to ask for the concessions, then you offer a higher offer price. Number 4, when budgeting for a home, factor in all the costs associated with home ownership, including property taxes, insurance, maintenance, and any homeowner association fees. Do not forget that HOA fee. I had a client one time who forgot all about having an HOA fee. We got all the way up to right before closing, and all of a sudden she completely freaked out, walked away from the deal because she had forgot the home was in an HOA and that she had those monthly fees that she was going to be responsible for. Number 5, look beyond the house itself and research the neighborhood. Consider factors like schools, commute times, amenities, and future development plans. What is the most important thing to you? And 6, consider how your needs might change over time. A home that suits your needs right now may not be the right fit in a few years. Always remember, when you buy a house, you have to think about the day that you're going to sell it. So don't pick out some house that's so unique that you're going to have a very difficult time selling it in the future. Number 7, in a competitive market, being flexible with your requirements and willing to compromise can make the difference between securing a home and missing out on a property. There is no such thing as a perfect home. If you get 75% of what you're looking for in a home, that's a win. Number 8, always get a home inspection to uncover any potential issues so you can renegotiate if possible. The mortgage rate has a profound impact on the affordability of a home. Higher rates lead to significantly higher payments, making it crucial for consumers to monitor mortgage rates and consider timing their home purchase to secure a favorable rate. Additionally, waiting to buy a home can result in both appreciation of the home prices as well as changes in the mortgage rate. By following the smart tips for home buyers, you can navigate the home buying process more effectively and make informed decisions that align with your long-term financial goals. I hope you found this video helpful. Hit the like and subscribe button down below, and we'll see you on the next one.